Good afternoon, everyone. 3 here in the UK on Tuesday, the 23rd of August. And as you can see, market's up a little bit this afternoon after yesterday's fall. 41.56 on the S&P 500. And as you can see, the short-term trend on VectorVest has been down since Friday morning. And the underlying trend is up. We've got it confirmed up in place. Buy-sell ratio has moved up strongly this morning, but still advising caution when buying stocks at this time. I think that's very wise. So, if we have a look at the VectorVest composite, folks, these are the medium-term market timing signals known as the DEW, which I rely on for my swing trading in the American market. And that gave a buy signal on the 19th of July. I personally didn't make much out of this because I was unwell, but it's still in and up. Although it closed below the moving average that defines its construction yesterday, the old DPO, the momentum indicator, is still above its center line at 0, so it didn't fire a sell signal. So if we got a positive advice from VectorVest that it's okay to buy stocks, then this move can very easily be back on its way again. Many people are arguing in the market at the moment of where it's going to go to next. Now, as I've told you 1,000 times, I make a great deal of my living off trading the SPX itself in the UK here through a spread bet. And that's the SPX, folks. I've been short of this, and I got stopped out of it this afternoon, I think. Was it earlier? I shorted it on Friday underneath that low. I'll show you the intraday chart in a second. And as my granddad used to say, every now and then the blind pig will discover the corn. It came back. The reason for that is that we were coming off a 2.618 extension of the last pullback, and the darn things rarely go any further than that. So you can see, I haven't drawn these very carefully, but you can see that up there that clipped that 2.618 pretty much to the tick apart from the noise. That and the breakdown of the 2-day low, which is much easier to see on the 4-hour chart. I had a target in at 4100 and it didn't hit the target, but I pulled the stop loss down to 4150 something earlier on to lock in the 100 points, and I got stopped out of that. I can always get back into it this afternoon. This is very important, folks, for to work out what's going to happen next, because if we put a fib on here, if this is a pullback, and in Elliott type terms, if this is a pullback, this would be a wave 4, and a wave 4 rarely goes below 38% retracement and should never go below 50% retracement. So if this market holds, and that was the reason I put in that take profit order at 4100, is that the 38% retracement is right there. So as long as it stays above these levels, then I, for one, am going to consider this a pullback. If it gets down below these levels, then, folks, the probability of a move down to hit the June lows and lower could certainly happen. Certainly the news can't be much worse out there. But for now, this is holding. I have a piece of free software with the intraday data on it. That's the intraday data. I was stopped out above that high earlier on, I think in the pre-market. If it should break down through these lows, then I shall short the darn thing again. But I would be very happy to see these levels hold. 38% of the run-up hold. So I hope that didn't confuse you more than enlighten you. The other interesting part, of course, is the gold market. And again, I've got the gold market here. I've been talking about the gold market and looking for an entry in the gold market for several days now. This is the push-up, and I'm glad to say I got most of that. And I've been waiting for this pullback. And this is a 4-hour chart, folks. And if I draw in the fib from that low to that high, you can see that it came back to the 62% level, and then all of a sudden it charted this magnificent outside bar, and I couldn't resist buying into that at 1747. The rationale for that is that the weekly chart is oversold, the daily chart is oversold, and I was looking for an entry from the 4-hour chart. It's got a long way to go. Stop losses as wide as a number 20, the back of a number 27 bus. The stop loss is at 1729. But I would be looking for a big move here. Clearly the market doesn't give one hoot about what I'm looking for. It will do what it wants to do. So those of you that don't trade via gold itself could trade the futures market, or you could certainly trade the GDX. If we have a look at the daily chart, you can see that's the daily chart, and the daily chart sitting at support. There's a long-term support level there, and that I'm hoping will push up from here. We shall see. We shall see. The stochastic that I use is in a mega oversold situation. So that's what I've done. I haven't done anything in the UK stock market. The UK stock market, VectorVest does not advocate buying stocks at this time. The short-term trend is down, underlying trend is up. We've got a confirmed up in place. I'm 53%, I think, invested. The rest's in cash, and if the S&P holds in the manner that I've just spoken about, in other words, those levels of 4100, and I think the 50% levels at about the 4,000 level. If those levels hold and we start to move up, then I shall add and build more positions in the UK. I spoke about the positions I had in the UK to the UK VectorVest user group yesterday afternoon. So taking 100 points profit in the S&P, and got a new long trade running in gold. The entry in gold is I think a good entry. I'm not trying to predict the future. What I am trying to predict in my trading is to engineer a huge risk to reward ratio. This trade on the SPX, I risked 30 points to make. I thought I was going to make 150. I made 100. So it's a 3-to-1 risk to reward ratio, and that risk to reward ratio is just so important, folks. If you can make more, 3 times more when you're right than you lose when you're wrong. You don't have to be right that many times to make a living, to make a consistent living out of this. So I hope that helped. Thanks very much. Bye.